has uncovered the Corporate Affairs Commission (CAC) spent 118.75 million naira in 2022 without supporting documents, raising fresh concern over transparency and financial discipline within the agency. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okeri. The findings drawn from an 808-page audit covering January to December 2022 and submitted to the National Assembly in September detailed multiple breaches of the Nigerian financial regulations. The audit notes widespread gap in accountability, unexplained expenditure, and payment process that lack the required documentation. According to the report, the CAC processed payment voucher amounting to 118,752,826 naira without invoice, memo, purchase order, or any of the record mandated by the Financial Regulation 2009. The Auditor General cited paragraph 603I, which requires full documentation for every payment, and paragraph 415, which caution against spending simply because funds are budgeted. The audit concluded that the Commission failed to comply with these rules, creating a risk of diversion of public funds and payment for service that cannot be verified. CAC acknowledged the expenditure and attributed a significant portion to requests from National Assembly committees for oversight visits to its office nationwide. The Commission says the reports generated from the visits were the legislative views and not retained in the records. Audit authorities dismissed this justification, noting that the agencies are required to maintain full documentation of every financial transaction, regardless of the purpose. The Auditor General has directed the Registrar General to appear before the Public Accounts Committee, recovered the 118.75 million naira, remit to it, the Treasury, and present proof of remittance. Failure to comply could attract sanction under paragraph 3,106 of the Financial Regulations, including possible recovery from possible officers and removal from office. The report also reveals that 6 vehicles belonging to CAC were missing from the agency's inventory. 5 were reportedly in the possession of the Minister of Trade, Industry and Investment, while 1 was with Special Assistant and the Permanent Secretary. The audit found no documentation authorizing the transfer, suggesting the ministry may have exceeded its supervisory authority. Financial rules require agencies to maintain strict control over their assets and bar supervising ministries from appropriating vehicles from the parastatals. While CAC says the vehicles were temporarily assigned as project vehicles, the Auditor General deemed the explanation inadequate and recommended their immediate return, with evidence submitted to the Public Accounts Committee. Another breach highlighted in the audit is the Commission's expenditure of 123.94 million naira on external legal service without prior approval from the Attorney General of the Federation. Regulations require formal instruction letters, service reports, and supporting court documents for such engagements. CAC argued that provision in the Companies and Allied Matters Act, CAMA 2020, empowered the Registrar General to manage the Commission's fund and develop internal policies. The Auditor General disagreed and directed that the money be recovered and remitted to the Treasury. Overall, the audit paints a troubling picture of the weak financial control, questionable expenditure patterns, and poor asset management within CAC. The involvement of the supervising ministry in the issuing of missing vehicle underscores persistent governance challenges and the bloodline of authorities in Nigerian public sector. Nigeria's money supply has risen sharply to an unprecedented 117.8 trillion naira in 2 years, driven largely by expanding bank credit to the government. Data from the Central Bank of Nigeria shows that broad money supply increased by 75.9% from 66.94 trillion naira in September 2023 to 117.78 trillion naira in September 2025, signaling excess liquidity in the system. Banks lending to the government also climbed to a record of 24.16 trillion naira in September 2025. The CBN's Money and Credit Report indicates that credit to government grew by 9.1% over a 2 years period, up from 22.14 trillion naira in September 2023, reflecting the administration's rising dependence on domestic borrowing. A breakdown of the figure shows that money supply in the first half of 2025 rose sharply by 80.6% to 117.25 trillion naira compared to 64.91 trillion naira in the first half of 2023. In the first quarter of 2025, the growth was even steeper, with 112% jump to 115.82 trillion naira from 54.63 trillion naira recorded in the first quarter of 2023. Bank lending to government, however, recorded fluctuations. In the first half of 2025, credit declined by 30.6% to 21.66 trillion naira from 31.23 trillion naira, while in the first quarter it fell by 10.7% to 24.59 trillion naira compared to 27.53 trillion naira in the first quarter of 2023. Year-on-year, bank credit to government dropped by 38.8% in September 2025, down from 39.5 trillion naira in the same period of 2024. Analysts note that although expanding money supply can support growth by improving liquidity and encouraging lending, rapid increases that outpace economic output typically fuel inflationary pressure. Rising government borrowing from local banks also reflects deeper fiscal strain, with potential long-term impact on debt sustainability, private sector lending, and overall economic stability. The Central Bank of Nigeria has proposed a new regulation that would place a 5-year ban on individuals who repeatedly issue dodgy checks. Under the draft guidelines released by the Apex Bank, any customer who issued dishonored check on 3 occasions due to insufficient funds will be classified as a serious dude, check issuer, and penalized. The proposed rules would bar offenders from accessing checks clearing system, obtaining credit facility, or operating current account for the duration of the sanction. Banks and other financial institutions will also be required to retrieve unused check books from affected customers and record their details on the credit risk management system, as well as at least 2 private credit bureaus. The guidelines outline stiffer consequences for those who reoffend after completing an initial sanction period. Any customers who issued a due check again will receive an additional 5 years ban for every subsequent violation. The only condition for lifting a sanction are the expiration of 5 years period or confirmation that a customer was wrongly reported. Upon removal of ban, financial institution must update the individual's status with credit bureaus and formally notify the customers. Banks that fail to enforce the regulation will face a penalty. A minimum fine of 5 million naira applies for not restricting sanctioned customers, while 3 million naira will be imposed on any institution that opens a current account without conducting the mandatory CRMS check. Afrexim Bank has reaffirmed plans to scale up intra-African trade industrialization and value chain expansion under the African Continental Trade Zone, outlining new financing tools and policy support aimed at strengthening the continent's product capacity. The AFCFTA Public Sector, Private Sector and Press Summit in Abuja, the Trade Facilitation and Investment Promotion, Intra-Africa Trade and Export Development. Dr. Gainmore Zanamawe says Afreximbank has developed a wide suite for instruments to unlock new levels of trade and investment flow across African markets. He noted that the bank disbursed $20 billion between 2017 and 2021 to support intra-Africa trade and is on track to double this to $40 billion by 2026. The Global Facility for Intra-Africa Trade Champion and the Engineers Procure and Contract Initiative were highlighted as catalysts for building African industrial champions and expanding manufacturing capacity. Through Intra-Champs, Afreximbank provides financing guarantee, advisory support, and ecosystem building tools to help African companies scale across borders. The program has supported the continental expansion of firms such as Elsewedy Electric and the Dangote Group. Zanamawe stressed that Afreximbank increased visibility at the summit reflects its commitment to making the AFCFTA operational and using its trade financing instrument to drive industrialization and regional value chain development. He acknowledged that the transition to a liberalized trade regime presents challenges for countries adjusting to new tariff structure. To support this phase, he explained that Afreximbank and the AFCFTA Secretariat established an adjustment fund backed by $1 billion commitment. Of these, $100 million has been allocated to the credit fund for commercial projects and $10 million to the base fund to support reforms and compensate for temporary tariff revenue losses. The bank also emphasized the importance of product standards, quality assurance, and export competitiveness. It supported the development of the Africa Quality Policy and contributed the review of the Nigerian Quality Policy. However, it urged Nigeria to strengthen its regulatory framework, particularly by passing the National Quality and Food Safety Bills to enhance market readiness, unlock export opportunities, and ensure sustainability of African quality assurance centers operating in the country. Zanamawe noted that the AFCFTA offers a historic chance to Africa to industrialize, boost production, and build shared prosperity, urging government and the private sector to sustain momentum through bold reform and strategic investment. The engagement reflects a broader push to position Africa for integrated, large-scale trade driven by regional value chain and stronger industrial capacity. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government policies. The Nigerian National Petroleum Company Limited has reported a profit after tax of 5.4 trillion naira for the year for 2024 financial year, its strongest performance since becoming a limited liability company. Group Chief Executive Officer Bayo Ojulari announced the figure in Abuja, noting that The latest profits represent a 64% rise from the 3.297 trillion naira posted in 2023. The company also recorded 45.1 trillion naira in revenue, an 88% year-on-year increase, driven by higher production volumes, stronger operational efficiency, and cost-saving measures. NNPC Limited has maintained a consistent profitability streak since 2020, when it posted its first profit of 287 billion naira. This increased to 674 billion naira in 2021 and 2.5 trillion naira in 2022, before climbing further in the last 2 years. Despite the strong revenue outlook, NNPC foreign exchange earnings declined sharply in 2024, dropping by 47.6% to 8.365 billion naira from 15.95 billion naira in 2023. The company attributed the overall financial gain to improved operational discipline and reform in the oil and gas market. The 2024 performance shows NNPCL posting 45.1 trillion naira in revenue and 5.4 trillion naira in profit after tax, with earnings per share rising to 27.07 naira. Ojulari outlined a long-term strategic plan aimed at sustaining growth and supporting Nigerian energy transition through 2030. The roadmap targets crude oil production of 2 million barrels per day by 2027 and 3 million barrels per day by 2030. Gas production is projected to rise to 10 billion standard cubic feet per day in 2027 and 12 billion standard cubic feet per day by 2030. The plan also prioritized key infrastructure projects, including the Ajaokuta-Kaduna-Kano pipeline, the Escravos-Lagos pipeline system, and the Obiafo-Obrikrum-Oben pipeline. To support this ambition, NNPC is seeking to attract $60 billion in investment across the upstream, midstream, and downstream sector by the end of the decade. According to the GCEO, the company is focused on transparency, innovations, and disciplined growth, with the goal of positioning NNPC Limited as a global competitive energy company capable of delivering sustainable return while driving Nigerians' future needs. All right, before we call it a wrap today, let's take a quick look at the stock market. The equities market opened the week on a negative note as gains on GTCO PLC, Access Holding PLC, and a handful of other stocks failed to counter broad losses across the key sector, particularly financial services. The Nigerian Exchange All-Share Index slipped to 143,614.61 points from 143,722.62 points, a 0.08% decline. Market capitalization also dropped by 68.69 billion naira, closing at 91.35 trillion naira. The downturn extended recent softness in the market, trimming the year-to-date return to 39.53%, down from 39.64% recorded last week. Despite a 2.3% decline in the broader banking index, GTCO and Accessco stood out as the major gainers. GTCO dominated both volume and value trading with 203.85 million shares worth 17.24 billion naira across 973 deals, to close at 0.36% higher at 84.80 naira. Access Holding rose to 1.46% to 20.80 naira, with 21.88 million shares traded in 1,262 deals. Losses in UBA with minus 2.85%. Sterling Financial Holdings minus 0.94% and Fidelity Bank minus 0.26%, weighed heavily on the sector, deepening sell-side pressure from previous session. Transcorp PLC also shared 1.10%. Fidelity Bank recorded significant activities with 131.51 million units traded as investors locked in profit. NPF Microfinance Bank led the losers chart, falling to 7.85% in total. Declining stock outnumbered gainers, underscoring weak investor sentiment. Market activities was slightly stronger, with turnover rising to 5.8% to 694.78 million units, worth 28.67 billion naira in 24,041 deals, buoyed by large transaction in GTCO and Accessco. GTCO remained the most traded stock by volume and valued outside the financial sector. Gain in e-Transact with plus 9.06%. Unilever Nigeria with plus 4.35%, and other growth-focused firms provided mild support. The NGX Growth Index was the only major indicator to close positive, rising from 13,925.92 to 14,068.77 points, reflecting selective investors' interest in high-growth segments. Overall, 26 stocks declined compared to 16 gainers. All right, this is where we call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms using @GlobalTVNG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.